Welcome to this week's Q&A. We've had a question from one of our Sydney viewers today, and he's asked, will foreign buyers continue to keep me priced out of the residential property market in Sydney? And look, it's a question that obviously we've been getting for a long time from people around Australia, not just Sydney, but particularly Sydney and Melbourne, where prices have escalated very sharply over the last number of years, and especially for first home buyers, it's getting really hard to enter the market. But as I've often said to people in relation to this particular causation issue, it isn't actually foreign buyers that are causing this escalation in prices, which seems to be something that people simply believe because there may have been certain stories in the news articles, news media to suggest that. The reality is quite different. And the recent numbers that we've received from the Foreign Investment Review Board show that in last year, so in the year to June last year, the latest data, the amount of transactions to foreign purchases in the Australian residential property market was the lowest in over 15 years, since the 2005-06 financial year. The current value is $10.4 billion, and that's actually $6.7 billion down on the year before. But if we look at the high point, that was in the 2016-17 financial year, it was over $30 billion. So, last year there were less than 4,400 transactions approved to foreign buyers. So, look, that's not actually causing the increase in housing prices, and we should actually potentially look at the flip side of that coin, because there's a reason why transactions have been so low in recent times, and that's been the closure of international borders due to pandemic restrictions and government's reactions to that. So that people can't come and visit Australia on holidays or for other reasons. Students have left, the international students, which were an important part of Australia's economy, but that's now changing. The borders have opened, and particularly students are already returning to Australia in quite some numbers. And as times normalise and people come and go from Australia on vacation and business trips, it will get back to, I'm predicting, where we were prior to the pandemic, where foreign buyers do still make up a small portion of the overall market. And remember, that's all it is, but that will still be a tailwind for housing demand and therefore housing prices, which I believe will be obviously more muted this time because we're now entering a rising interest rate environment, and the RBA is about to kick that off, as most economists will now predict, in June of this year. So keep an eye on this, but make sure that, I suppose, you look at things realistically, and it's actually the people living in Australia, the Australian domestic market, that is determining the price of housing that we have to pay. And that's going to be influenced in some respect by overarching macroeconomic conditions, and that's something we certainly keep an eye on. But it's also going to be influenced by domestic features such as interstate migration, the valuation gap between markets. One that's very evident is what figures are showing us now, that prices are continuing to rise in, say, Brisbane and Adelaide, whereas they're coming off in Sydney and Melbourne. And that's simply due to where prices have moved to over the ensuing couple of years. So keep an eye on that. It's a really good question. It has a lot more to do with macroeconomics than people believe. Simply foreign investors coming in and flooding the market and bidding up price of housing in Australia. That's not actually accurate. So I look forward to more good questions, and we'll see you next week in next week's Q&A. I'm Andrew Unterweger from Wise Guru.